Staying in the financial services sector, savings and credit cooperative societies may soon be able to lend to each another to meet their daily funding needs, much the same way banks do through the overnight interbank lending facility. Carilus Ademba, the Sacco Societies Regulatory Authority Chief Executive Officer, has said the authority is currently working on the rules that will guide the workings of the proposed facility to be known as the Central Liquidity Fund. There are about 4,000 Saccos in Kenya controlling a combined 250 billion shillings in deposits. And with the cost of credit now at an all-time high, owing to the prevailing high interest rate environment, Saccos are a most preferred source of credit for most borrowers in need of affordable loans. Statistics held by the Sacco Societies Regulatory Authority shows Sacco members with active loans currently number about 1.8 million people compared to 1.9 million people with bank loans. But a recent study conducted by Alpex Consulting Africa has shown that Saccos are largely unable to meet the demand for credit that comes their way, with the funding gap they face being estimated at 160 billion shillings every year. A situation that has continually forced Saccos to turn to commercial banks for additional credit lines, albeit at an exorbitant cost.
The bank, you can see the rate has gone to 25-27%. So Saccos cannot borrow at 25%, come back and lend it to their members at 12%. It doesn't add up. It is against this backdrop that the Sacco industry regulator has proposed the creation of a Central Liquidity Fund that will enable Saccos to meet their immediate liquidity requirements with ease. The fund will operate along the lines of the overnight interbank lending facility that is managed by the central bank. And according to SASRA's Chief Executive Officer, that facility will go a long way in helping Saccos to lend more money and at reduced interest rates. The Sacco sector can get proper funding, boost more of their saving. They have a bigger potential, equally, just like banks, to roll out a bigger chunk of the loan. To further protect the savings that Saccos hold, SASRA is working towards the launch of a deposit guarantee fund within the next 6 months. Ademba said the proposed fund would offer a soft landing for deposit holders should their respective Sacco collapse. Majority of the savers, the Sacco savers, have savings of 100,000 and below. What they need to have wherever they are is that if our Sacco goes under, then my saving is safe, and the deposit guarantee fund will refund me my money. SASRA is currently working towards the selection of the fund's trustees, with an independent consultant engaged as part of a World Bank funded capacity building project. The two proposed funds are part of the confidence-building measures being undertaken to raise the financial status of Saccos. This as Nairobi prepares to host an international gathering of African cooperative leaders on 14th to 15th of August. Global